Anthony Grasso here, bringing you financial news you can use. Normally in my videos, I do a stock review and analysis, but in this video, I'm going to bring to everyone's attention the SEC's Investor Alert and Bulletin on the significant risk of short-term trading based on social media and investing in bubbles and manias. My channel gives investors an analysis on fundamentals, analyst projections, research reports, and future growth prospects of companies, and ultimately gives an unbiased opinion weighing in the pros and the cons of any particular investment. So with that being said, let's go look at the SEC article in question right now. So the SEC back in January 30th, just a few days ago, sent out this bulletin about thinking about investing into the latest hot stock. And I'm going to read through this specifically word for word. So understand the significant risks of short-term trading based on social media. The SEC's Office of Investor Education and Advocacy warns investors of the significant risk of short-term investing based on social media, especially in volatile markets, and provides tips for long-term investing. Retail investors may seek to profit from the volatile markets by buying individual stock, including stock in heavily promoted companies with smaller market capitalizations, which a lot of the stock reviews I do on my channel. Some of these stocks may be discussed in social media, news aggregators, investment research websites, online investment newsletters, ratings websites, message boards, chat rooms, and discussion forums. It can be tempting to jump on the bandwagon and follow whatever the crowd seems to be doing. Sometimes, however, following the crowd may lead to significant investment losses. And that's when we hear the term FOMO, fear of missing out, being on the bandwagon. So retail investors should understand that all investments have risk, and short-term investing in a volatile market carries significant risk of loss. Short-term trading, including trading aided by the use of margin and options, which I know a lot of you guys are doing right now, can lead to significant and unanticipated losses for retail investors. A Library of Congress report identified, that was the report back in 2010, and I suggest everybody look at that report. It goes over manias and panics, and it's a 23-page report. So just go on the SEC's website and check it out. Now, that report identified several investing behaviors that can undermine investment performance, including behaviors that involve short-term investing. Investors should keep in mind these behaviors when considering investing in a volatile market, including investing in bubbles and manias. Financial manias, or a bubble, is the rapid rise in the price of an investment, reflecting a high degree of collective enthusiasm or exuberance regarding the investment's prospects. And there's been a lot of stocks where I was reviewing it where it already 10x'd already. That was a mania to get it to jump up 10x. This rapid rise is usually followed by a contraction in the investment price. Right now we're in a raging bull market, and a lot of people are saying, oh, you're a boomer and you're wrong. But you have to listen to what's going on, and you need to do your due diligence and research and actually read this SEC article and that report. The contraction or panic occurs when there is a wide-scale selling of the investment that causes a sharp decline in the investment's price. We're not there yet on a lot of these stocks, but I think it's going to happen. Now, another investing strategy that can pose high risk for retail investors is momentum investing. It's where an investor using a momentum investing strategy seeks to capitalize on the continuance of existing trends in the market. A momentum investor believes that large increases in the price of an investment will be followed by additional gains and vice versa for declining values. If that belief turns out to be incorrect, it can lead to significant losses. A third related trading strategy is noise trading. Noise trading occurs when an investor makes the decision to buy or sell an investment without the use of fundamental data. That is economic, financial, and other qualitative or quantitative data that can affect the value of the investment. Noise traders generally have poor timing, follow trends, and overreact to good and bad news in the market. And there's been a lot of times where I've been explaining this in my videos. I haven't used the term noise trading, but I've used this as a warning to people that, hey, it is disconnected from the fundamentals when I see a stock that is. We also have to be careful about investing with margin, options, or short sales. All investing has risk. If you invest using margin, options, or short sales, these risks may be magnified. Margin trading using borrowed money to buy securities can be very risky and is not appropriate for every investor. Before you invest using margin, consider that You can lose more money than you have invested. You may have to deposit additional cash or securities in your account on a short notice to cover market losses, which we call the margin call. And your brokerage firm can increase its margin requirements at any time and is not required to provide you with advance notice. So for more information on margin trading and the risk, read the SEC's investor bulletins, Understanding Margin Accounts and Margin Rules for Day Trading. Now, options are contracts to buy or sell a stock for a specified price on or before a certain date. Like other securities carry no guarantees, investors should be aware that it's possible to lose all your initial investment and sometimes more. Option holders, buyers of option contracts, risk the entire amount of the premium paid to purchase the option. If a holder's option expires out of the money, the entire premium will be lost. Option writers, sellers of option contracts, may carry an even higher level of risk since certain types of option contracts can expose writers to unlimited potential losses. And you can read more about that in the SEC under the bulletin and Introduction to Options. Now, short sales involve the sale of a stock you do not own or borrow for delivery. Short sellers believe the price of a stock will fall. If the price falls, short sellers buy the stock back at the lower price and make a profit. However, if the price of the stock rises, short sellers will incur a loss when they have to buy the stock back at a higher price. Short sales can expose an investor to the possibility of unlimited losses, since a stock can theoretically keep rising indefinitely. And then the SEC has a bulletin on an introduction to short sales. I encourage you to go read that. And then market and broker-dealer protections for volatile stocks. The National Security Exchanges and FINRA have rules designed to address market volatility in stocks listed on the National Securities Exchange. The limit up, limit down rules are designed to prevent trades in these stocks from occurring outside a specified price band. This price band is set at a percentage level above and below the average price of the stock over the immediately preceding 5-minute trading period. If a stock price moves outside these price bands for more than 15 seconds, trading in the stock will be paused for 5 minutes. And they actually have a bulletin on that of measures to address market volatility. Also, broker-dealers may reserve the ability to reject or limit customer transactions. And I want to highlight that because that's what Robinhood kind of did just a few days ago. This may be done for legal, compliance, or risk management reasons, and is typically discussed in the customer account agreement. In certain circumstances, broker-dealers may determine not to accept orders where a transaction presents certain associated compliance or legal risk. Now, you have to be aware of potential market manipulation on online platforms like Reddit. Fraudsters can use online platforms including social news aggregators, investment research websites, online investment newsletters, rating websites, message boards, chat rooms, and discussion forums to spread false or misleading information. Fraudsters may try to manipulate a company's stock price either positively or negatively and to profit on it at the investor's expense. For example, in a pump and dump scheme, fraudsters pump up a company's stock price by making false and misleading statements to create a buying frenzy and then sell shares at a pumped up price. In other instances, fraudsters start negative rumors urging investors to sell their shares so that the stock price plummets, and then the fraudsters take advantage of buying the shares at artificially low prices. Now, the SEC urges investors to consider these long-term investing tips. Know your time horizon for investing. Often, information you need online about specific stocks can be short-term in nature, like a lot of the things I discuss on my channel. It focuses on events that may have an immediate impact on investments. Focus on long-term goals and consider the benefits of diversification and asset allocation. My channel, when I give a recommendation for a stock, I'm looking at the long-term growth prospects, but I'll also give you the short-term potential of a stock. Investors should create and follow a financial plan. Real-time discussion platforms and buy and sell indicators driven by social sentiment may lead you to make emotionally driven or impulsive investment decisions, which can be a risky way to approach investing. Do not let short-term emotions about investments disrupt your long-term financial objectives. If you're considering short-term investments, think about how much your overall portfolio you should allocate to these types of investments. Investors should be careful when investing based on information received on social media. While online platforms may provide useful investment information, use extreme caution when making investment decisions based solely on information found on social media platforms. Never feel pressure to invest right away. And before you invest your money, research the company thoroughly. And that's what I do on this channel. I research the fundamentals of the company, analyst projections, and give you an unbiased approach to make a decision for yourself. Make sure you understand the business and carefully review publicly disclosed company information. And a lot of that company information is directly on the company's website under the investor form. You actually read their reports. Take your time researching and making any investment decision. Now let's look at what the SEC is currently doing right now. And this is a news article that just came out. The SEC is hunting down possible misinformation on social media posts for signs of fraud in Reddit-driven trading frenzy, report says. The SEC is scanning social media posts for signs of potential fraud and volatile trading, Bloomberg said. The regulator will hunt for misinformation intended to directly manipulate the market, and users of the WallStreetBets forum mocked the move by hosting a discussion to greet SEC interns. What you guys are doing right now on the WallStreetBets forums is playing with fire, and the SEC doesn't mess around. And I can guarantee you, if they see any signs of potential fraud, you're going to see a lot of news coming from the SEC over the next couple months where they went after people. So let me bring it back over here. So there you have it, folks. And don't forget to do your due diligence and do your own research before you invest in anything. I will try to provide you the most information I can on fundamentals, analyst reports, analyst projections, market conditions, and potential future growth opportunities of any given company that I'm going to be reviewing into the future. So as always, folks, thanks for watching, and don't forget to smash that like button down below, and definitely consider subscribing to my channel and hit that notification bell if you like to hear daily stock reviews and recommendations. I'm definitely going to do a few today. So until the next stock update video later today, folks, ciao.